the amount of hurdles that you could overcome by doing
Right.
FedNow, plus the bank now is able to provide much more flexible connections to clients is invaluable.
Hmm.
Invaluable.
Yeah, sure. So, James, I loved our conversation with Vlad today because, anything that has to do with instant payment, anything that has to do with payments, period. But,
Right.
FedNow has made a big splash in
Yes.
the trade press. I
Yes.
think that Vlad had a really good take on it.
I do too. I think, this whole FedNow thing has kind of been in the works and we've been talking about it off and on, but the fact that it's actually here now, it's
Going
live, and yeah, that's a big deal. And I think our industry really needs to understand it from a lot of different perspectives. And I think Vlad did a good job of covering all of those different perspectives.
I love your question from the field segment, shall we say. It wasn't really a question, but it was a great discussion of core values.
Yeah,
I
and
really appreciated
what's
that.
interesting, Patty, is I actually have gotten a lot of questions about it from consulting clients because they're always asking me about, well, what, their company culture and why they can't seem to get things moving a lot of times. And a big part of it is people aren't aligned. And so, yeah, I enjoy talking about that. And then tell us about the insiders.
It's about toast getting burnt. Which, like as I said at the beginning of my segment, is a turn of phrase I've been dying to use. So
yes,
stick around for that.
Before we dive into that interview, let me just say that Vlad, Nativia, Nativia Banking is one of my consulting clients. They're an advertiser, sponsor, all of that sort of thing. They didn't pay me to do this interview, but I always like to present that ahead of time that is one of our active consulting clients and advertisers. And so with that being said, let's dive into this interview with Vlad. Hey, everybody. Pat and I are here today with our good friend Vlad, who is the CEO at Nativia. How you doing today, Vlad?
I'm doing great. Thanks for having me.
Absolutely. So
thanks for being here.
We are going to talk today about a very exciting new thing that just kind of came out here, which is called FedNow. Patty's had a few different insiders reports about it. But we wanted to talk to somebody like Vlad, who's had a lot of experience in the banking side of things as well. So Vlad, maybe you could start off. You've been on the podcast several times. I think everybody kind of knows your backstory a little bit, but what is FedNow? Like, what is this thing? Give us kind of the high level, and then we'll dig into some details.
So FedNow is an instant network that's now originated by Fed that basically will move forward fast money movements between banking and financial technology institutions around the country. And every other country has had some sort of faster payment options for many, many years. In Europe, very, very popular concept is open banking. In our country, there was a thing called RTP, real-time payments, that kind of started in 2017.
Right.
Had some success, but not as much. And now finally, Fed decided to wake up, and they finally trying to do something about it.
Yeah, and and the point I think that some of our listeners should understand is that the Fed doing it means that eventually every bank and credit union in the country will have access to offering these instant payments to their customers. Whereas with RTP, there's only a handful of banks that actually are doing that.
Well, RTP currently, because it was an earlier network, RTP currently covers about 70% of the banks.
Right, but are that many of them actually using it?
A lot of them are using it, but they're using it to push money out of their bank.
Right.
They're not using it to retrieve the money in.
To pull money in.
So right. So even though the capabilities are there on the RTP network, it's not the scenario under which banks are comfortable doing money in. With Fed, it will be a two-way street very, very quickly.
Right.
RTP is a product of Clearinghouse, and it's built on the MasterCard rails that MasterCard acquired in Europe, a company called Wordling a few years ago.
Right, Wordling.
And that network is a very stable, very good network, and it's pushed by Clearinghouse, which also does majority of the ACH payments in the country. But obviously with Fed had FedWire for so many years, right, and so many people rely on FedWire today. Obviously, Fed moving up to that scale, it will definitely speed up the process of innovation in the real time and space. RTP has some advantages, which we can talk about it later, but I think over time, quite honestly, my money's on Fed.
Oh yeah,
Yeah,
that's a good
the other
bet
thing
to
that,
make, right?
yeah, I think it's a great bet. But the other thing that always struck me about the Fed, even FedWire, is it wasn't available on weekends and holidays. Whereas FedNow is going to be 24/7 by 365.
Overtime, keyword.
Yes, yeah.
Right. Yeah. Yeah. Well, we know
So,
the government always gets things done on time and on budget. I mean, we know that. So,
oh,
so
and the
Vlad,
Fed's the best.
right. So Vlad, that's a really good segue. Actually, you mentioned kind of the innovation side of it. So, who has the access to using FedNow at this time? What types of organizations are even able to start innovating with this technology today?
So Fed is starting with 53 partner banks. The actual list of it available on the Fed website. And there's larger banks, of course, there. There's some smaller banks, and there's two fintechs that are actually starting to provide FedNow services. Um, and that's their starting point. Major difference between FedNow and the real-time payment network today is FedNow is available for transfers up to $500,000, where RTP network is available up to $1 million. And as a matter of fact,
Oh,
funny thing is, RTP had their highest number this month
yes, I saw that.
ever. That's the Fed influence.
Yeah, yeah, I agree. I agree. How would you say the Fed now, though, differs from, other quote unquote instant payment methods like Venmo and Zelle?
Oh, so Venmo and Zelle in the back use payment networks
Right.
such as RTP and push to payments, which is
Mhm.
a very popular network that both Mastercard and Visa has. So it
And
goes
Visa.
to the card brand rails, right? So
Mhm.
Mastercard Send is a push network that gives you instant payments, card to card transfers. And the Visa is the same thing, called product called Visa Direct.
Mhm.
Together, they cover 90% of the cards which are connected to the checking accounts, which allows them to put the money into your account during the weekend hours, right?
Okay.
So
Yeah.
that's the major difference between how you could push the money.
Right. Right. Uh-huh.
Yeah, I would think the other big difference too is just as far as like when you think about Fed now, at least for me, when I think about Fed now, I don't think as much about consumer type payments. I'm thinking more of like businesses moving money around would be the primary, like at least the initial. I don't know, Vlad, do you agree with that, or is it going to be more of a innovation on consumer payments, or is it going to stick to more B2B for the beginning?
I think it's going to be B2B in the beginning, but it will quickly go into the consumer due to the financial technology companies starting to utilize those
Sure,
rails.
that's a good point. Once the
And they're going to
fintechs get a
start
hold of it,
and right,
Yeah.
they're going to
Exactly.
augment their payments. So
Right.
everybody's thinking about how they're going to augment their payments. How they make it more economical for them internally, and therefore continue to have the same user experience
Right.
as a whole. And so that's kind of where that is. And I think also a very important part to understand is how it's going to impact our payments merchant services business.
right?
Um, so think about it today, when companies like ours that have a payments bin, uh, we go out to Fed at 11 o'clock at night, and we initiate the payments from Fed by doing Fed wires. Once that scenario goes back down to the bank that has FedNow capabilities no longer need to send it out to Fed, and therefore we'll be sending out money from the bank over to the merchant versus going out to Fed, and that will make it instant, and it will make it available pretty much, as you mentioned, James, 24/7.
Yeah.
And so that's the cool part for merchant services that's going to change over the next, I want to say, 12 months.
So do you think that the Fed now is going to replace legacy systems like FedWire and the ACH?
I don't know about ACH, but definitely FedWire.
FedWire is going to be sort of history at some point.
I am 100% convinced that would be the case.
And my understanding, and correct me if I'm wrong, Vlad, but FedWires are pretty expensive. It's generally kind of expensive to do anyway, right? And
it's expensive to do. It's expensive to do. It's cumbersome. It's you get the money in 20 minutes, technically speaking, right? And in some cases, it's manual, right? So when you think about that, the amount of hurdles that you could overcome by doing
Right.
FedNow. Plus, the bank now is able to provide much more flexible connections to clients is invaluable.
Mhm.
Invaluable.
Yeah, sure.
If you were the CEO of Visa, Vlad, what would be your thoughts on FedNow? And what I mean by that is there any concern here that the innovation is actually going to become kind of competing with the networks? There's no interchange, so this is a much faster and less expensive way, and so now we're gonna, I don't know, like, is there a world where there's maybe a threat to the card brands in your mind, or no?
So you have to think about it from the card brand perspective in two different facets. Number one, card brand's been preparing for movements like that for quite some time, right?
Of
So
course.
they've been buying auxiliary services for many, many years at this point,
Mm-hmm.
right? So Visa tried to buy Plaid, right? They didn't succeed in that. MasterCard, however, did buy a company similar to Plaid, and that now have MasterCard connectivity. We actually use it in-house for our banking services. Um, MasterCard and Visa both did faster rail payments. They did chargebacks. They bought chargeback companies. They are trying to move into that world to diversify their interchange revenue. Of course, they over time, I think that they'll take a hit um, with interchange revenue, specifically on debit,
Mhm.
right?
Right.
Because debit doesn't have any risk. So why would I use my debit card if I can just do bank to bank transfers? As a matter of fact, Jamie Dimon recently spoke to their team at Chase, and they're moving everything into the Chase network of being able to do very similar thing that FedNow does because they see what's coming.
Right.
And interestingly enough, there was interesting observation made for Chase card business, and that includes debit cards, even though it's regulated. It's a $5 billion business. So
Right.
for Jamie Dimon to say something like this and say we're gonna go another direction, we're gonna go bank transfers directly to
Mm-hmm.
Chase route and put a lot of money into that effort is basically squashing almost a
Right.
$5 billion business within Chase.
Yeah.
So they're obviously, if somebody like Chase thinks like that, I can't imagine what CEO of Visa is going to be thinking as this thing gets popular. Right now, they're just going to probably take a wait and see approach, like
Right.
anybody else would. But they're obviously going to have to diversify their revenue over time. I'm definitely
Yeah.
convinced with that.
Yeah.
Interesting. Yeah, I was just kind of curious about that because I thought about that a lot. Every time I see the FedNow stuff in my mind, I'm always like, I wonder what Visa's thinking when they're seeing this. It's interesting.
They're still going to have credit volume. Don't forget,
Yeah. They
credit
got
volume is still
credit
going to be
volume all
there.
over the
Of
world.
course, yeah. I think
Right.
I love your point. I wasn't thinking about that. That really it's more of a debit thing. As far as a threat goes, it's like
Mhm.
people are still going to want to use their credit card. FedNow does not provide them with a credit line, so that makes sense.
Correct.
Right.
What about
Right.
kind of a very much of a shift in direction here, but like small business owners, right? How is this going to impact them longer term? I mean, how do you see this? How is this innovation going to change the way that small businesses operate, if at all?
The question is kind of probably should be different. How is the companies that are innovating within the small business market are going to provide
Right.
services
Yes.
to the small business owner? Small business owner, unfortunately, is absolutely helpless with any type of money movement scenarios, which is what we're talking about, right? So it's the companies that are going to provide the solutions to small business owner that are going to be providing the opportunities for small business owner to do things in different fashion, and that's part of the innovation. So this is a question as who's going to get to that small business owner faster, who's going to be able to
Right.
give them a product that they're going to love or
Yep.
they're going to fall in love. And I'm sure it's going to fall around the fact that what's the main pain points for a small business owner.
Right.
Number one pain point is interchange, right?
Yep.
It's
Sure.
probably one of the biggest expense small business owner currently incurs outside of their utility bills. When I started in this business 20 plus years ago, we used to come into a merchant and we used to pitch, so look, if you accept credit cards, your sales are going to be larger, and you're going to benefit on the fact that we're going to bring all these card holders in, right?
Mm-hmm.
Today, you can't pitch that product. Today, people understand that the card holders are going to come. It's already there. Everybody has it, right?
Right. The network's
So,
established. Yep.
right, the network established, and now you need to think about how do you going to optimize your costs versus anything else.
Right.
So that's why, you know, things like cash discount is now popular, right?
Right.
And so that's really what the situation with the small business owner is.
So, as of right now, somebody who is involved in kind of this neo-banking scene and all of that, you know, and you're seeing FedNow happening, what are like, let's make this really practical. Like what kind of really specific innovations or things do you see? You already mentioned kind of for our industry, you know, being able to pay merchants out instantly. What are some other things that you think banks are going to come out with in terms of actually like productizing FedNow?
I think some of the banks are going to come out with, you know, pay directly to the bank. I think that's going to be coming very quickly. So big banks are not gonna start using Zelly. They're gonna say, look, you know, yeah, we can use Zelly, but you can really, we can really, you know, pay directly to us. So pay by bank, pay to bank, pay by bank is probably going to be something people are going to do. And you know, they amass a huge volume of people, and I'm sure there's going to be an app that's going to just incorporate a bunch of banks. I mean, look, I mean, 5 banks in the country control majority of the deposits in this country, right? So yes, they did Zelle, but I think that they're gonna separate it from themselves and basically say we can just run this. And I think that Zelle is gonna also create their own payment network. If you ask me, I think there's a lot of talk about it,
Yeah.
and I think they're gonna have enough cloud to be able to do that.
Right.
Sure.
And so I totally see Pay by Zelle as an alternative option to credit cards
And
debit
pay by
cards.
Zelle being a bank-to-bank type of payment. You're using
Bank to bank, and in the back
pay.
is gonna bank to bank, and in the back is gonna be FedNow.
Right. What about the payment processing industry? You know, how do you see FedNow impacting our audience? You know, and what, if anything, should ISOs and sales reps be doing at this point to prepare for?
I think the number one thing that people are going to be doing is they're going to try to get the money to the merchants faster. Right? Today's next day. I mean, we've been offering same day for quite some time. It's a popular option within our portfolio. I think that instant funding is going to be the next thing. So we're going to start running on speeds similar to stock market. You know, when you come into a TD Ameritrade and you see prices change instantly, this is how fast deposits are going to be coming in. And I think ISOs and agents have to be thinking about it, and have to be working with banks and ISOs that are actually, you know, at least developing those type of products over the next 12 months, because it's really bank dependent, right? We are all subject to sponsorship by the bank. So if you're with the bank that's not looking into that direction and not working on the FedNow solutions, then long term you're going to have that portfolio at a disadvantage. So if you start placing and you start talking to the bank and say, hey guys, what are you doing about FedNow? Are you going to be part of it? Are you gonna, you know, do something about it? And if the answer is yes, you're in good hands. If the answer is no, you should be thinking about partners that at least thinking about it today.
Yeah, I like that. So let's get really specific here with what you're doing, Vlad. I'm really kind of curious about this. I know you always have you're like me, you always have a million things going on here, and so you're seeing FedNow. I know you're seeing opportunity. So let's talk about 2 things. So first of all, I would love for you to talk for a minute about Nativia banking specifically for the ISOs, right? Because that's something we've never talked about on the podcast. So give us maybe the elevator pitch of that kind of concept, why you've done that, and then I'd love to also hear what plans if you, I'm not sure how much you could share, but what kind of roadmap stuff do you have with FedNow, and maybe even specifically as it relates to this ISO banking thing?
So we are looking at providing on the Nativia banking, we are looking at providing additional services. Of course, we're subject to bank being willing to be part of FedNow infrastructure, right?
Sure.
So the good news is that Nativia banking services, it's a financial technology app just like Square, and the good news about that is that we are partnered with a number of banks, not just one, at this point. And we're looking at the same thing that I was just telling you before, which is whoever of our bank partners are going to come up with the ability for us to move money faster, that's who we're going to be, pushing our accounts and looking at these services. Today, within the Nativia banking service, we provide ACH services. We provide next day ACH and same day ACH. But we don't provide any wire services yet, or the services that are related to even faster payments like push and everything else. and obviously we're gonna push that initiative
Right.
further to try to provide those and obviously we're a disadvantage because Zelle until recently did not accept neobanks into their ecosystem, so you can't send me money to Zelle. It's the number one problem that we've been
Mm,
discussing with everybody. So
Right.
one of the things that we're actually doing is we're verticalizing our solution and we are creating a Nativia network. And what Nativia network is, we created bank-to-bank transfers. So for ISOs specifically, which I think is something that ISOs do not have today, and I've talked to many people, especially at the latest show in MWAA, that we're going to be able to pay the residuals instantly within the Nativia network. So one of the things that we're doing is we are encouraging our ISOs. We're actually, as a company, moving all of our deposits starting the months of September to be paid only to Nativia bank accounts as a preferred method of payment.
sure.
And then we're encouraging all our sales reps and all our sales partners to open up Nativia bank accounts and be able to move the money between those accounts instantly. Our account-to-account feature accommodates instant payments. It's absolutely free. It allows our partners to pay instantly, get their residuals 2 days earlier than we currently pay, and we obviously going to incorporate bonuses and residuals with it. It's a
Right.
very big initiative within the company today, and at the very least, within our industry, we will be able to be the fastest guys to pay out the payments. It gives an opportunity to adapt our solutions for every ISO that we have on the books. It gives our ISOs to enroll their agents and move the money within the network of Nativia, which is called the ISO-driven network at this point when it comes to commission payments. Something very unique,
Yeah.
and I think it's a very unique way to experience our products firsthand.
It's so funny, Vlad. I was talking to a consulting client recently, and we were going to start doing like an upfront bonus payment. This is like a tech company, and they're like, okay, so I guess what we should do is like once a month we need to look back and see like what sales were made, and then we would, pay this bonus out. And I was like, no, 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 like you're paying 1099 reps. Like if you're waiting 2 days for them to get their money, you're waiting way too long. And so I was funny. I actually was brought up in the Nativia banking because I'm like, maybe talk to Vlad, like set something, because the whole idea is like these agents. And I remember when I had my last ISO that I sold, I guess it was like almost 8 years ago now. But I mean, at that time, Vlad, we actually were, how did we do this? Well, I'm trying to remember. It's either a wire transfer. Anyway, we had this option where the agents, it was like a $400 upfront bonus, and the agents could choose to lose like $15 of it to get it like that same day or something. And it was like,
Right.
40% of the bonuses, they took that, it's like, you could get the money tomorrow, but no, 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 I'll pay
Right?
the $15. I want it right now. And so I think
Yep.
that's super, super important to have that concept. So this has been so interesting. We have a million other questions about FedNow and P2P and everything else, which we'll get to in another interview. We definitely want to follow this up. But for right now, give us the info on Nativia, maybe Nativia banking. For those in the audience that want to learn more, they want a partner that's got the Nativia banking side, but also somebody on the processing side, maybe that's looking into the FedNow and all of that. Like, where would you send them to learn more?
So I would definitely send them to our Nativia site, www.nativia.com, and you can just click on ISO banking, and you'll get all the information about it. You'll get all the benefits. You'll get all our benefits that we just made with available to the audience with hotels and restaurants. There's 4% there. I personally went to the Outback Steakhouse that was around the corner of my office, and it's automatically enrolled it, and I got my 5% cash back just by using the TVA banking card. So Red Lobster, Outback Steakhouse, Marriott's are all part of our preferred network of partners that are providing discounts to the TVA rewards. And our new reward system is on par with Chase. Believe it or not, we don't have all of the partners yet, but the way that you could redeem your products and you can redeem your revenue, it's super easy. And for ISOs and agents that want to open up the Nativia banking services, even if you're not a partner of ours, just open up an account. You get to double dip if you become a partner. You get to get the benefits if you don't.
Right.
And it's really simple. We have a lot of partner interest that have been doing it, and nothing more pays better than instant payments. and
Yeah.
they are instant.
Yeah, I love it. That's awesome, Vlad. Well, thanks so much. Always enjoy your insights. Appreciate you taking the time to join us today.
You're welcome, James. Always happy to have.
Yeah, thanks again, Jim. Glad it was really informative.
Hey everybody, this edition of the Merchant Sales Podcast is brought to you by ISO AMP, the leader in full service statement analysis. Today, Patty, I just want to talk for a minute about marketing. Okay. We have really designed our API, we've designed our marketing campaigns, all of this to allow for marketing automation. So whatever it is that you're doing with merchant services, you're out there marketing, probably a big part of that at some point in the sales process is going to be looking at a statement, understanding margin. And if you work with our team, we can help you automate whatever that process is. We can automate, taking the pricing from our system and feeding it into an online app like an under.io or Iris or something like that. And so whatever automation you're looking for, we have the API now to do that. We have all of this already rolled out. Our system's really well established, been around for a long time. So if you want to learn more about that, just head over to getisoamp.com. It's getisoamp.com and fill out the form to get a free demo and check it out. So Patty, today I want to share a really quick segment with our audience that is really more geared at the executives and the people that are actually building the larger businesses. So as we close in on, I think in about a week, we'll have 30 full-time salary paid employees here at our company. And so,
oh my gosh.
Yeah, so that's a lot of growth in the last, I kind of
A
got
lot of
serious
growth
about
since
it.
I've met you.
Yeah, I kind of got serious about it again about 18 months ago after my 3 and 4-year-old got to be old enough that I was like, all right, I'm going to get back to working a lot more. So, but anyway, our culture is so strong here at our company. And I actually appointed one of our very first employees that's been with me for a long time. And she's now our chief culture officer. I got
Is that Angela?
That's Angela. Yeah. So yeah.
Uh-huh.
I got a lot of questions from people of kind of like, oh, what kind of a position is that? Is that kind of bogus or what is like, no. And so I want to talk today about stated values, shared values, and core values. So most companies will tell you what their core values are, right? But they're actually not. For most companies, they're stated values, right?
Right.
And that means they're on the wall. You can read them.
Yep. And that's the only place they are.
Yeah. So that's level one. Level 2 is
Right.
shared values. So shared values is where you do generally, especially in the recruiting process, you're looking for people that share these values, right? And you kind of have maybe some standards in place and things like that. And so you have these shared values. So a lot of companies are really good. They have shared values. I personally know very, very few companies who have what I consider core values by that true name. Now, they might call them core values, but to me, a core value means it's the core of your company.
Right.
At our company, we have 5 core values, and you could ask any of my employees what those 5 core values are, and they would be able to immediately tell you what they are and what they mean for their position. And that's, by the way, a great test for your team to see if you actually have core values. Ask your employees, what are they and what do they mean? But what's interesting about our core values is that we have a chief culture officer, because what she does, Angela's job is to make sure that we have all of these, operating processes that are being done to make sure these values are core to our business. So as I'll give you a couple of really quick examples, right? So, our 5 core values are the only thing that we discuss during our one-on-one reviews with our employees. So we do quarterly reviews with each employee. And so Angela makes sure that those happen. And also that, in our system, we've updated those core values. So we talk to you about always living, what's your work-life balance like right now, right? Do you need more flexibility? Do we need to change something? How do we make this a better experience? We talk about always learning, and we say, okay, let's outline, what did you learn the last 3 months? What do you need to learn the next 3 months to position you to grow in your career and accomplish your objectives, right? Always inspiring. What's your attitude like? Are we have any drama, right? So our entire process there goes through those core values. That's what our reviews are, is we are reviewing how that employee is aligning with the core values, right? So she does that. She makes sure every month that all of our employees answer. We have a question called, what was your learning experience last month? So tell us some new things you learned and all that. And if somebody doesn't update that, Angela goes in and says, hey, and tags them in our company chat. Hey, we didn't see your post. We'd love to hear what you learned last month. There's so many things I could tell you. We do a big event every year. That's our Always Living event. So she's working on planning that for next year already. And so all of these things are driving these core values because they're actually at the core of the business. So my quick challenge to you today is, if you have a business really of any size, you're looking to grow. I had these core values. We added the 5th one, but we had the other 4 core values, 10 years ago, and we've had them all along. No matter what size your business is, do you have core values? Are they meaningful? Do your employees know what they are? Do they know what they mean? And are they actually core operationally to the the recruiting process, the review process, the execution, everything? Are they actually core? If they're not, you might consider getting some core values, because it's just going to make your life a lot better, and it's going to make your company a lot more successful.
Okay, well, here's a turn of phrase I've long wanted to use.
Okay.
Toast got burnt.
That's great. I love it.
Bad.
Yes. Yes, they did.
First, it introduced a 99-cent surcharge for online orders,
Right.
of $10 or more. Then within weeks, in response to public outcries, it reversed course.
Yes.
And then the stock market rewarded it by diminishing the value of the stock price by 15% in the space of about a week. You know, the CEO said in a statement on the reversal that it was a wrong decision. But an analyst, here's something I read from an analyst this morning. Certainly the leadership team looked ineffective because of this wishy-washy behavior.
Yeah.
Still, Toast continues to struggle because of its long-standing obstacle, achieving profitability, which of course we've discussed here many times.
Right.
But, you know, here's where things, for me, I thought things got really interesting, because in the days following the reporting on the new Toast fee, there were several social media posts, apparently from restaurant owners, that Fiserv was implementing a similar surcharge through Clover. That is not so, a Fiserv executive told me. But back to Toast. The move provoked a lot of reaction from competitors who blasted out social media posts, about the fee, promoting their fee-free policies.
Yep.
But it also caught the attention of lawmakers. One congressman in particular from Missouri, Mark Alford, who told, he sits on a small business committee, and he told Fox Business News that he was ready to investigate this. What I loved was the headline, quote, "Sudden new fees charge millions of Americans by big tech vendor Toast, spark congressional query." Now, who wants to have that headline? Wake up to that headline.
Right. Yeah. When you're the CEO of Toast, that's a really bad start to your day.
That's a bad headline. So here's a couple of quick thoughts I have about all this.
Yeah,
and
sure.
James, feel free to interject.
Yes.
But first, I think it suggests, as we said before, Toast is struggling financially, and it's going to look for other ways to boost revenues. It's going to increase other fees, probably somewhere, somehow.
Right.
Second, in the current political environment, where lawmakers from both parties are pushing pro-merchant legislation, like the Credit Card Competition Act, and the White House has declared war on junk fees, I think it's a fool's errand to invent any new fees around the shopping experience and payments in particular.
Yeah, absolutely. I actually made a post about this on LinkedIn that got a lot of interaction and reaction. And what I said was, I think this was bungled terribly from day one.
Oh yeah.
In my mind, they should have done. They would have done two things. I think would have been fine. Only two. The first thing that they should have done is they should have positioned it relative to DoorDash and Uber Eats.
Mm-hmm.
Right? Because that's really what it is, right? Now, it's not delivery, but it's this online order pickup thing. And they should have said, they should have come out and said, hey, press release, hey, you know what, as we're now really building out our online ordering platform, we, had a lot of discussions about what to charge our clients. We wanted to go against what DoorDash and Uber Eats are doing by taking 20, 30% of the order.
Right.
And we instead have implemented a simple 99-cent fee. If they would have presented it that way, instead of it's like, hey, we have an extra fee. Like, what a stupid thing to do. That's like, to me, that's like PR 101. You got to position what you're doing in a positive light.
They need
didn't do
good
that.
PR people.
They do. And then the other thing they should have done is they should have said, and there's, why would they care if the merchant absorbed this, right? Like, why would that matter? Like, literally, it's a toggle switch in the app. They could have, their developer, whoever developed this, that team could have taken an extra day and made the feature. And then when they rolled it out, they could have said, now by default, we know we all have the data to know customers are used to paying extra fees when they do an online order. Look at DoorDash.
But if you don't want to do it,
but if you don't want to do that, just toggle the switch and you can absorb it. We want to give you the freedom to manage your own customer experience. So if they would have done those two things, I don't think it would have made barely a ripple. but they didn't.
Yeah, but they, they bungled it, and I don't, and I do think this whole war on junk fees it's not just against banks,
No, oh, I
it's
know. Oh, no,
yeah.
it's they've been talking about airlines and all kinds of stuff. Yeah,
airlines and
absolutely.
what do you call it? Tickets, online ticket ordering. I mean, I have
Yep.
to admit, I hate that. I hate paying that online ticket order fee.
Oh, there's a lot of, I mean, every industry now is kind of going with the junk fees and all that.
Yeah.
I think that's going to be interesting. I think, one thing I will say in kind of defense of Toast is that, while again, I do think that they kind of made a stupid screw up here. I will say, I think I actually read their 10K, like, I don't know, but the last quarter 10K and,
Right.
their financial report, because they're a publicly traded company. Patty, I don't know. I read it and I was like, wow. I mean, if you ask me, the thing they need to do if they really want to turn a profit is either like replace the management team or something. I mean,
You think?
when you
Yeah.
read their financial statement, I mean, to say that Toast is in financial trouble is just it's almost ludicrous. I mean, they have 80,000 restaurant locations, and
Yes.
they're doing the payment processing and the point of sale system. And the thing that's so shocking about all this to me is I'm shocked that they would decide, okay, so let me give you an example here. I ran the math on this, okay? If
Okay.
15% of their transactions right now are going to run through this online order thing, which I doubt it's that many, this would have generated $5.3 million a month in new revenue.
Right.
Now that may sound like a lot, but if you actually look at their profit and loss report, it's trivial. And so to me, why on earth you would do all this negative publicity for the chance of getting $5 million a month when all you need to do is either, number one, find a way to dramatically cut your cost of acquisition, right? That would have been an easy one in my opinion. Or number two, find a way to increase some other fee, like seriously,
yeah,
that's going to impact everybody. Like if you're going to go to the mat for something, you might as well make it worth your while. If they would have done something like an additional fee per location, like there's a lot. It's interesting, Patty, because we've seen
there's a lot of places where they could have done it.
Oh yeah. And it's funny, Patty, we've actually seen a lot of Toast statements with ISOAMP. And what's funny about it is I was under the assumption 6 months ago that they just are so exorbitantly expensive, right? But they are some of the times, but a lot of times they're ridiculously cheap. It's really strange how they'll have companies that we had a client we were working with, a big restaurant client, and they were, their Toast was like 2.6% flat rate on the processing and pretty reasonable SaaS. And I'm thinking to myself, like, why don't they do a price increase in this person? Like because I know their margin, like I know it's not a very highly profitable account. Right. So anyway, all that to say, to me, this was what people don't even realize is this was the 99-cent fee for online orders through their platform that are greater than $10. Like there's not very many of those. I would actually be surprised if it's 10% of their total transactions. And they did all this mess, almost got a congressional investigation, for that, like
all for $5 million a month.
And I just thought when you read anybody looks at their profit and loss report that understands finance, you're like, okay, Square is not in trouble. They just need a different management team with a new objective to generate a profit.
I mean, you said Square, but you meant Toast.
I meant Toast. Sorry. Well, yeah, Square is nearly in the same position.
Square's a whole. We'll deal with that next week.
We'll deal with that next week. Yeah. So anyway, but that's my thought.